Hello, and thank you for joining us today. We're very excited to be able to share an agenda which, is near and dear to me, that combination of what's happening in the market, what's the forecast, and then what are some tangible things that we can do to address the opportunities and challenges ahead of us with technology. So we're going to have a few speakers today who I'll introduce shortly, but first I want to start with a little bit of housekeeping. Everyone will be muted throughout the presentation. We'll have well over 100 attendees today. And if you want to ask questions, which we highly encourage, please put them in the questions module in the control panel. And we will go through those, and I will help ask those as we have time today. We do want this to be an interactive session, so please do post your questions throughout. We will have a little bit of Q&A time saved towards the middle and the end of the session. So please line up any of your inquiries that you'd like to make. Finally, everyone will receive a recording of this session tomorrow. It will be emailed out to you, and you'll be able to listen if you want to pick up any snippets that you might have missed throughout. So moving to the next page here, I'd like to jump into the bios. So a little bit about me. I'm the North America lead for energy for Capgemini, and I have been working with this industry for over 16 years. And I know that we have been going through quite a challenging time between some of the black swan events that have happened recently. But I do want to share, and I think you'll see from some of the speakers today, a little bit of light ahead of us. What are actual tangible things that we can do today to address some of these challenges? So moving to the next page. So I'd like to go through the speakers. Today we have Melanie Vargas, who will kick us off. She's the Director of Gas and LNG for Wood Mackenzie. She has a background in M&A, transformation, and has worked in her past both in consulting for Accenture. And today, really what she focuses on is due diligence and financing for LNG pipeline and gas gathering assets. So I'm very excited what she will be sharing with us on her perspective on the market going ahead. Moving to the next page. We're also joined by Richard Horman, who's Vice President and Head of Finance at Accelerate Energy. And he has a very unique and interesting background. While he spent over 19 years in financial leadership, he's worked across Fortune 500s, private equity, and emerging growth organizations. And he also spent a portion of his career in transactional advisory with one of the big four companies. What stands out to me for Richard is, he has a very keen sense in my experience in working with him of understanding where leading edge technology can achieve business outcomes and how to take the first leap into those. And so one example is, he helped lead Accelerate Energy to be the first company in putting SAP in production in AWS. And today, he and Gautam Ramdas, who, if we turn to the next page, are going to talk about what they've done in blockchain to help minimize OpEx expenditures. Gautam Ramdas is a leader in our energy practice in Capgemini. He's been with us for 18 years, worked mostly with Fortune 500 and emerging growth organizations as well. Gautam leads and is a key team member of what we call our digital core, COE. So this is really an innovation engine that we as Capgemini have to continue to innovate around what traditionally are core ERP components. And today he's going to share that example, as I mentioned, with you all. So moving to the next page. I'm going to hand it now to Melanie to share perspective on the gas to LNG value chain with you all. So Melanie.
Thank you, Elfije. So I just, the way I'll do this is I'll start with talking through Wood Mackenzie's latest short-term outlook, and then I'll talk through our long-term outlook and the changes that we're expecting for the gas and LNG space in our next long-term outlook, which should do a better job of reflecting what's happening in the market today. And then I'll talk through what that means from an infrastructure player perspective, particularly players interested in participating in US LNG development. We can go ahead and jump to the next slide. The key message I want everyone to take away here is that despite short-term turmoil in global gas markets, Wood Mackenzie's long-term outlook remains robust, and we expect a recovery to begin towards the end of this year and continue through 2021. A lot of that is linked to indications of a recovery in China already starting. Much of the workforce is already back at work, and we're hoping to see consumers pick up spending. We expect WTI prices to rise over $35 per barrel before the end of this year, and we're already getting closer to that every day now. And ending 2021 at roughly $55 per barrel, averaging $45 per barrel in 2021. Henry Hub, we've seen, has remained relatively stable, and we expect JKM and TTF to also start a recovery this winter, albeit from a very low bottom. Our view on a U or V-shaped recovery is based on a couple of drivers. One is we're able to leverage proprietary pandemic modeling capabilities from a subsidiary of our parent company, Verisk. We have an AIR catastrophe modeling solution that is a capability we sell to insurance companies. We can also leverage real-time data from Genscape, so we're looking at all the pipeline flows and following all the LNG projects. We leverage their forward curve short-term outlook, as well as monitoring leading indicators such as pollution, air and road traffic, et cetera, to help us gain a perspective on the shape of the recovery. In terms of what the short-term dynamics mean for US LNG developers and supply that's already online, one of the things we've seen is maintenance delays, but the bigger trend is around shut-ins. That have been impacting roughly 2 to 2.5 billion cubic feet per day of LNG capacity. And the way we've seen that is through the gas flows to the LNG projects via Genscape. Flows were around 8 billion cubic feet per day before falling those 2 billion cubic feet per day that we've seen over the last month. Shut-ins are expected to continue through November of 2020, when we expect CAM and TTF differentials to widen enough to cover cash costs in a normal winter season. We expect June and September to be the worst impacted months in terms of shut-ins, and with upwards of 23 cargoes canceled in June and 22 for August and September each. And that's based on forward curve spreads to the EU. On the demand side, we've seen significant impact, but not nearly as substantial as on the oil side. And we expect global gas demand to contract about 2% this year relative to 2019. That's about 7 billion cubic feet per day of impact. In the US, we haven't seen as much impact as expected in the residential, commercial, and industrial space. And in power, we've actually seen an increase in gas demand, and that's driven by historically low Henry Hub prices that have driven accelerated coal to gas switching in the period. So even though overall demand is down, we're still seeing gas demand in power up. In China, we've seen impacts of 500 million cubic feet per day to 1.5 billion cubic feet per day, but only 2 million tons per annum of impact to LNG. Though, as we said, we'll continue to see impacts there. And in Europe, we have seen bigger impacts in the 4 billion cubic feet per day range. In terms of the long-term risks, and looking beyond 2021, kind of some of the risks that we're expecting are, one is that, the timing of these cycles. So these cycles that we have in our long-term forecast are driven by the long lead time of LNG projects. And so this rebalancing, we were always expecting a glut this year and next year. It's been exacerbated by the demand shock. And we were always expecting a recovery kind of in that 22 timeframe. That could get pushed out. The peak of the recoveries could also flatten a bit, and long term we could see the price curve flatten a bit, just driven by which projects FID first. If the Russians and the Qataris are filling in the gaps, we could expect that price curve to push down. Okay, that covers our forecast here. We could jump to the next slide, please. So on the long-term story, the reason we're bullish on long-term demand for gas and LNG is it's really truly driven by demand in Asia and the fact that indigenous supply cannot keep up with the demand growth. So if you look at LNG markets, historically they've been, the demand markets have been relatively concentrated across China, India, Korea, Japan, Taiwan. But as we look forward, we expect a lot of demand to grow in developing economies in Southeast Asia and India and China. One of the key challenges that creates for LNG suppliers is that there's a lot of infrastructure needed to realize this demand growth long term. In India and China, which reflect roughly 30% of the growth. In the smaller emerging economies, there's even more infrastructure needed and a lot more investment, and the track records are just not as developed in the LNG space as some of the historical buyers. So if we could jump to the next slide. On the supply side, what we're seeing is growing global competition and concentration. And so 5 countries will reflect the majority of demand in 2040, Russia, the US, Qatar, and Mozambique, and Australia, with the US reflecting roughly a quarter of supply in 2040. Of course, all of this gets pushed out a little bit, given the current dynamics in our next outlook. We should expect to see that. And then on the right-hand side, you see the supply from the US, and it's a really competitive dynamic globally. It's also really competitive in the US. So while we see or saw in our last outlook a potential opportunity for 43 MMTPA of pre-FID projects to move forward, that could also shift and that could also shrink in our next outlook. And what we're looking for to figure out which projects move forward are really, the big one is marketing. So are they able to secure those long-term funding agreements with off-takers? That is especially significant for projects trying to secure debt financing to reach FID. Additionally, feed gas sourcing. So even though there's plenty of gas in North America, there's congestion around pipelines. And so the off-takers and the banks financing these projects are really interested in understanding how the project will secure its reliable long-term gas supply needed to meet its commitments. Most credible projects in the US we've seen jump over those EPC and regulatory hurdles. So we can go ahead and jump to the next slide. So what has the response been from North America LNG developers in the second wave? Really the shift in the demographics, the global supply glut, it's really driven a shift in business models and the willingness of off-takers to take on risk. And so in that first wave, we had a different market, and what we saw was a lot of tolling out of US LNG developers. That's a pretty low risk model. The off-taker takes on the arbitrage risk, the off-taker takes on the supply risk, the EPC takes on the execution risk. And the infrastructure players like Kinder Morgan, Dominion, Sempra are comfortable with that model because it's consistent with how they've done business in the past. The innovator in that first wave was Cheniere, who was willing to take on a little bit of the supply risk with their SPA FOB model. In the second wave, the preferences have shifted in terms of what the buyers are looking for, and we've seen many more flavors of business models emerging. So the first example of taking on execution risk is Venture Global with taking on some of that EPC risk and offering a low-cost solution. If they're able to pull that off, that's a differentiated product relative to the other available projects. We're seeing hybrid models and small-scale models like Texas LNG. We're seeing new flavors in terms of the indices used for pricing. So we have that next decade deal where they're doing oil index pricing. We've all heard of the Cheniere deals with Apache and EOG, where they're taking on some of the arbitrage risk. And that's a really unique deal because Cheniere doesn't really take on the risk. They were able to leverage their position in the market to bring counterparties together to manage that risk. Cheniere's also been moving further downstream into DES in this wave. The Tellurian model is one of the more differentiated models there in the sense that it offers an integrated equity. It covers the end-to-end value chain all the way to liquefaction and gets into marketing. And it really puts the off-takers on equal footing with the developer in terms of the value proposition of the project. And let's not forget that the integrated IOCs can do this all, but even they are leveraging partnerships to facilitate integration long term. And in 2020, we expect to see some things take off, more like what we've seen in the international space, where we're seeing, rather than just an LNG solution, we're seeing an energy solution being offered to consumers. We can go ahead and jump to the next slide. So reframing kind of that last slide around what the options, what the strategic options of the day for infrastructure players participating or wanting to participate in US LNG, I just want to really emphasize that it's a challenging and competitive market. Okay, so everyone can play individually and in the midstream, offering non-Henry Hub indexation. The midstream is very competitive. There's lots of players trying to get in there and already partnering. We've seen Enbridge partnering with Next Decade and Innova, and there are other examples out there. In terms of the producers that you can partner with to offer non-Henry Hub indexation, well, that's really a limited group of partnerships in terms of the producers that can take on that risk, and that universe is shrinking rapidly. In terms of entering liquefaction, we know there's more projects than what the supply needed indicates. So that's truly a competitive space. And so the differentiation now is in the integration and in leveraging partnerships to offer a more integrated solution. And what we think could emerge and is emerging internationally is a move into demand markets. And so things like what Golar, Vopak, ExxonMobil are doing, moving into regas, moving into pipelines or virtual pipeline infrastructure, moving into power to lock in that demand long term and secure the utilization of their upstream assets. And with that, I'll pass it back to Elfije.
Great, thank you, Melanie. And we did have a question come through here. So one of the questions is, for the companies that are still pursuing FID, you talked about a couple of factors that are going to be critical for them going forward. I mean, is this a race amongst the companies who are looking at this to secure their infrastructure and their marketing contracts? Is this going to be the first to go is going to be the winner in this market? What's your perspective on that?
Absolutely. I think truly whoever secures enough marketing and gas to secure their financing will move first and take that slot. And there's multiple credible projects out there that could do that. In our outlook, I believe we have Tellurian's Driftwood project, but there's another 4 or 5 that we believe are also competing for that slot.
Okay. The next question is actually going to be for Richard. So Richard, Accelerate Energy has a pretty unique business model. I'm interested in your perspective on, Melanie has talked about infrastructure and demand markets, and really that's where the growth is. How do you view Accelerate in terms of being advantaged or disadvantaged given that trend?
So just to give you a perspective, I've been with Accelerate Energy for 12 years, and we have transformed ourselves. Before we were having facilities in the UK and the US, and the US used to be the largest importer of LNG, and now we've become, because of shale gas, a producer of natural gas and also an exporter. So we had to reinvent ourselves as a company. And as we started our first project in Argentina, we have created new markets and access points for the suppliers to trade cargoes into. And for our business model, it works very well because LNG is one of the cleanest ways and most reliable ways of providing energy to the countries that don't have an energy solution. Majority of our customers are either on coal or on liquids, petroleum, and petroleum is quite expensive, and coal causes a lot of environmental impacts. And for us, our solution is a fast-track solution, and there's a lot of demand. 60% of our world demands are in Asia, and we know that a lot of customers that we have, or potential customers, are seeking from us projects to trade cargoes into. But in order to trade cargoes in there, they have to have a regasification solution. And we are, if you look at CapEx alone, a fast and cheaper solution, most economical solution with a very low environmental footprint in the countries that we serve. So for our business model, we've actually seen the demand increasing rather than level off. And I think this is good news also for the supply chain of LNG cargoes, because as the US producers are producing more LNG, there will be more market access that we provide through our projects.
Okay, and Richard, I saw not long ago Accelerate Energy made quite a bit of news in its arrangement with Bangladesh. Can you just share a little bit about that and the context here?
Sure. So Bangladesh, it was a project where Bangladesh, majority of their power generation is done through coal. Also realized that they had some expansion issues in regards to their economy. Majority of the fertilization plants, which should run 7 days a week, were constricted because of the lack of energy supply, and could only perform about 3 days out of 7 days. So with our LNG projects and providing natural gas with a joint venture agreement that we have with IFC together, World Bank, we were able to build infrastructure there. It was a subsea pipeline with a buoy system, so there was no need to put any footprint onshore and in the coastal area. And with our project, we have 2 FSRUs currently in Bangladesh. The fertilization plants are running 7 days a week, non-stop, which also increases the food supply and agriculture. But at the same time, it also gives the country a chance to build on their economy. Let's not forget, for any least developed country, in order to have growth potential, you have to have the underlying infrastructure. And power is the main driver when foreign investments are seeking to build industries in those countries. And with our project, it provides the foundation for Bangladesh to grow. So when we started this project, we knew not only that we wanted to provide a service, but we knew that we could make a difference in the countries that we should provide the service to. It was very self-fulfilling for us as a company, because it's not just a customer and vendor relationship that we have, but we're making a change in the country and providing the people a chance to grow from a least developed country to a developed country, most likely.
That's great. Thank you for sharing that. It's always a good reminder to hear, in the industry that we're in, what is some of the good that comes out of the work that we all try to do every day. So moving to the next page, I do want to hand it back to you and Gautam to talk through Accelerate Energy and the blockchain program you have done, some of the reasoning behind why you even went into pursuing that. So I'll hand it to the two of you.
All right, thank you. Accelerate Energy, as you know, is the leader in floating storage and regasification solutions in the world. And many of you may know who are in the LNG sphere. We're the first company to convert LNG into natural gas ship-side. And in addition with the ship-to-ship transfer, which is basically just an LNG conventional carrier supplying through STS kits, which are basically cryogenic hoses, we were able to get LNG from a supply chain view from the conventional LNG carrier to our FSRU. And in that sense, we were able to provide nonstop regas service to our customers in 7 countries around the globe, from the Far East Asia to the Middle East and Latin America. Our company prouds itself to be an innovator and a solutions company in the LNG sphere, and we are a fast-track LNG regasification project solution. We provide new access points to LNG suppliers around the globe. In 2019 and 2020, Accelerate Energy had made the decision to transform itself from being a ship owner and operator to bringing ship management in-house. This meant the entire crewing and maintenance program and spare parts management was going to be done in-house for our 9 floating storage regas units. This was a daunting task on our supply chain management, especially in logistics. The big question hereby was, how do we get the spare parts and goods to our remote locations, to our vessels, and lose no visibility? So Gautam, if we go to the next slide. Yes. So to put this in context, we put together the process model and realized what had started off as a logistics issue. We acknowledged that it had a deeper problem in itself that had a direct impact on OPEX and cash flow. So the lack of visibility of our shipments meant we had to track our shipments manually via emails or phone between a third-party logistics provider, custom agents, and the appropriate countries, and the husbandry agents that launch the goods from custom agent to the vessel in the country our vessels are located in. Additionally, many of our customers require certain documents that needed to be presented for rebillable items, and as such, all these documents were gathered by email in the past and definitely slowed down the cash flow process for us. In addition to accuracy and timeliness of having to do the goods receipt process manually and a procure to pay process via email between vendor and third-party logistics, and our supply chain management team was very consumed in regards to timeliness, and many times information gets lost in this process. So if we go to the next slide. So we were using a vast number of third-party logistics providers such as DHL, CEVA, GAC, Kühne Nagel, which are the main players in this sphere. To ensure that our fleet of vessels can perform at its peak, we have to guarantee that the spare parts for our FSRUs are receiving the parts timely to do the scheduled or unscheduled maintenance work. The current structure has been quite manual, and as Accelerate Energy has gone from a ship owner to a ship manager, we needed a solution. But before you can truly define a solution, we had to first frame the problem that we would be facing if we would go down the path with current setups that we had of tracking our logistics process. And many times people think it is easy to find a solution, but it's actually more difficult to find the problem and visualize it. And as such, we had engaged Capgemini to truly understand our challenges. Everything is manual, email, phone, reconciliation with spreadsheets. So Gautam, if you kind of walk through the logistics process that we have currently at Accelerate.
Sure. Thanks, Richard. So basically, as Richard said, right, step one, what we did was we mapped the inputs and outputs in the entire procurement to a supply chain process, right? And as you see the slide, we identified 4 critical players in this particular supply chain. Number one is, of course, Accelerate, right? Issuing a purchase order to a supplier. So that was the first party involved. Second, due to the nature of our operations at Accelerate, the second party within this entire chain is your logistic providers, like the DHL and GAC, as Richard mentioned, right? The third party within this chain was the customs agents, right? Because as you can imagine, a lot of these vessels are in different countries, which means to get materials, operational materials through these have to clear customs, right? So that was a third party. And subsequently, when the customs clears those products, it's the husbandry that delivers it to the vessel, right? So we identified these parties. Now, as we identified and traced that a lot of these were manual, we found that largely there were three big issues, right? Number one, as Richard said, because it was manual and the need on the vessel timelines were being compromised most of the times due to the manual email mechanism that was going on, there was a surge in OPEX, right? Reason, we probably ended up shipping more products through air shipments as opposed to ocean, right? And as you all can imagine, an air shipment costs 5 times more than an ocean shipment, right? Second, a lot of the contractual obligation with our suppliers, we have a unique Incoterms, which is called X-Works, right? Which means Accelerate takes possession from the vendor location. That's our business model. Now, the challenge is when you do that, you have to recognize your goods receipt process, right? You need to recognize your liability. Largely because a lot of these processes were manual, there were instances we saw that appropriate goods receipt and liability was not recorded to the supplier, right? Which didn't give a clear picture from a cash flow perspective, right? Last issue that we found with the current operation as it stood was that Accelerate was not able to invoice their customers on time, right? As Richard mentioned, they are in, Accelerate is unique in sense and are in regions which are heavily tax syndicated, right? For example, some of the Asia Pacific entities require certain documents from customs for Accelerate to get paid, right? And because we didn't have that critical documents, we saw that there was an impact from a collection which impacted their working capital, right? So we identified that apart from the track and trace, the supply chain network transparency, it led to a lot of OPEX, cash flow, and working capital impact, right? We then went into the root cause, right? The root cause really came boiled down to three things. Number one was there was a lack of transparency on supply chain, which means when I issue a PO, the supplier didn't know who was the 3PL, who was the customs, and who was the husbandry. So there was a little bit of challenge getting that information across, right? Second, there was no real-time update. For example, say a supplier picks a product and there is a damage, right? An OSND project outcome, basically, right? That there's a shortage, there's a damage. How do we resolve that? That timely update was never happening, right? And third was there was no monitoring or tracking from a handoff perspective. There were instances we saw that the 3PL delivered as promised to the port, but then the next party who's the customs didn't know what was going on, and then the product came in. So there was a breakdown between these parties, right? The communication was not transparent enough for the other party to pick up this information. And since Accelerate didn't have this visibility, that wasn't efficient because we had to follow up with emails, phone calls saying, hey, the product is there, can you please pick it up? So at the end of the study, we identified the problem, as I said, large buckets, three root causes, lack of transparency, right? Not a transparent supply chain management, right, from an end-to-end perspective. And last was the monitoring handoff process was not optimal for us to be efficient as an organization, right? So what we did was after that, we did an evaluation. Richard, maybe you want to just talk through the products we evaluated and how we picked up the option we went with.
So now that we understood the problems, we had to look at the different software solutions that were available. Since Accelerate Energy uses SAP as its core ERP system, we reached out to SAP and looked at their transportation management solution and compared this against different softwares such as blockchain and other bolt-on software providers for logistics. One thing that we cannot forget, Accelerate Energy's operating model is not to be a logistics company, but we are an FSRU operator. SAP Transportation Management, or also known as SAP TM, is a robust logistics system that would be used for a true logistics company whose core business is to be a third-party logistics provider. This would require very high headcount increases in regards to resources. We all work in this time at a place where we need to do more for less, so hiring many more employees to man the software was a non-starter. In addition, the recurring maintenance costs would be high, as well as the application management support you would require to run the system would be very high. You would have to have at least one developer as a full-time resource in case you have problems with the system. So the implementation cost is 10 times higher, and the implementation time was probably the longest of all solutions. We looked at a third-party bolt-on software provider as well. Even with that solution, you would have to build interfaces between the bolt-on software and SAP. With any software update that comes, the linkage could break, and you would have to make further upgrades. Additionally, the more you scale it, the more the cost goes up. Again, you had to hire more resources on the logistics side to track your shipments and to do the goods receipt process manually. Implementation just alone on the third-party bolt-on within their system would have been 5 months plus an additional 1 to 2 months of interface programming that would have been required. Help desk support would have caused a problem as you have to interface between 2 separate systems. Blockchain was a complete game changer as it truly empowered the user. It was easy to understand for the user, and it also had the advantage of being economical and fast against all the solutions that we looked at. We will not have to increase our headcount for logistics, nor do we have to add any additional resources on the IT side. Once implemented, blockchain will run, and it is very scalable with very little to no development required. Maintenance cost, because it is on the cloud, is extremely low. So if we can go to the next slide. Yeah, once the decision was made that we're going with the world's first blockchain solution for logistics, we had to put this again in context. And Gautam, if you could walk everyone through the enhanced scalable solution you designed for us. But I also like to add one more thing. Blockchain is an agnostic solution that can connect not only with SAP, but with any underlying ERP system as it sits on the cloud. Gautam, if you could please walk everyone through it.
Sure, thanks, Richard. So again, going back to the root cause or the problems we're trying to solve, right? Number one was lack of transparency in supply chain, right? The second issue we had to resolve was the lack of real-time data, right? Third is the monitoring capability and handoffs to different parties, right? That's where we saw blockchain, like it's been in the market, as you know, for a long time, and then people associate that with Bitcoin. What we came to realize is that pretty much what we were asking was in line with what a blockchain solution does, right? A blockchain natively does give you updates on a real-time basis, right? It is transparent to all the parties or actors in the blockchain. And third, it gives you the capability from a monitoring and has mechanism to trigger alerts to different parties, right? Which is what we orchestrated and we brought to the table, basically. Now, with blockchain, what we've done, as Richard said, is number one, is as soon as a purchase order is issued, we've enabled capabilities which notify all the parties in the supply chain on a real-time basis, right? So the entire chain, as soon as a PO is released by Accelerate, the supplier and the downstream agents, which is your 3PLs, your customs, husbandry, know that there's some work coming, right? That's number one. Second, based on our contractual terms with the 3PLs, as I said, ours is a unique Incoterms that we have where we pick a product from the vendor location, right? So that service, we work with the 3PLs where it's just not giving us an update that they're picked. They give us an update through the chain of process, right? So just so that you understand the magnitude, step one is they pick the product. Step two, they get it to their warehouse. Step three, they do OS&D check, right? Are there overages? Are there shortages? Are there damages within the products? And then they do something called as a line item check, a quality inspection, basically. all of these status are tracked on a real-time basis, right? They write to the blockchain ledger, a distributed ledger, and Accelerate users are able to see that on a real-time basis, right? Once there's a shipment confirmation that the 3PL sends, say it's an ocean, we get that notification, which means our users can literally click an airway bill and see where the products are, right? The last thing, just from a 3PL perspective, is if there's a delays in shipments, we've enabled capabilities within blockchain that it notifies Accelerate and the business user saying that, hey, this shipment is delayed, maybe a port is shut down, right? Probably something common we've seen with the COVID-19 situation. So that information is enabled on a real time. And the last part, just from a 3PL perspective, is the handoff to custom happens seamlessly. So once they deliver to a port, it triggers notification to my next party, which is customs, right? Again, as a process, we did realize that some of the customs and husbandry are not as sophisticated as the 3PLs to send electronic messages. So what we empowered them is an application which sits above the blockchain where they can enter information on the status, right? They can upload critical documents which natively integrates to Accelerate's content management, which means as customs is cleared, Accelerate has that documents on a real-time basis, right? And subsequently, once it delivers to a ship, we get a proof of delivery, which means the captain has signed off receiving this product, right? So as you see here, with this approach, there's no increase from an OpEx perspective, right? Because Accelerate is, we want Accelerate to focus on the energy business. We don't want them to focus on logistics. So we've taken that process away by blockchain, basically, right? As a result of that, you reduce that OpEx. They don't need people tracking logistics, right? 3, the biggest transformation from an Accelerate standpoint is this real-time information is given to our users, which means me as a captain on the vessel, I don't need to talk to my procurement team in Houston, right? It's all about logging into the blockchain and seeing this visibility on a real-time basis, right? Which is kind of in line with our strategy of renewable enterprise to empower the business users. Because an IT transformation is just not about putting a system, right? It's about giving users the visibility and information on a real-time basis. So that being said, Richard, do you want to talk through some of the benefits, early benefits we are seeing out of this?
Yeah, if we can go to the next slide. Yeah. As our operating model is to be an FSRU operator and ship manager, we wanted to empower our supply chain management team members to have the visibility needed for an end-to-end solution. Additionally, via an easy-to-use track and trace remote application, it allowed our captains around the world to have the ability to see where the shipped items or spare parts are in the world in real time. As a result of having the 3PL doing a line item check of the goods received from the vendors via the PO and the bill of lading, we have the ability to do the goods receipt for financial purpose in a 3-way match procure-to-pay process. This gives more accuracy for the financial side to do accruals, but also provides more accuracy to the treasury group in forecasting cash flow. Of the countries that we do business and have currency restriction as such, customs and shipping documents have to be provided to be able to obtain reimbursement for these costs. In the past, we used emails to obtain these documents. With blockchain, it is centrally stored and can be retrieved within seconds. This blockchain has been a game changer, not only in the logistics sphere, but also in other parts of the business that would be affected. I'd like to highlight hereby, yes, many people ask, did the developers do this who have done LNG before? And the answer is, it really doesn't matter because this technology is new and has been used in other areas. And we started this journey of first thinking that we had a logistics problem, but realized via the scalability of blockchain, as long as something can be measured and quantized, it can be tracked via blockchain. So this is absolutely scalable to the LNG market in regards to trading of molecules. And because of it being agnostic, it can connect to any underlying system that you currently have. So any further questions, or Gautam, you want to add anything more?
No, I think you covered it, right, Richard? Just to summarize, basically, we've used partnering with Accelerate or technology like blockchain to empower the business, right? Keep their OpEx low. And lastly, as Richard mentioned, this is just one use case we see on the LNG space. We do see opportunities in multiple areas like operations and commercials. So we definitely see this. And as an LNG provider, as you're looking at softwares, you can be assured that we as Capgemini are looking at blockchain, and we are happy to come and talk to you and see, realize, and give you the benefits from an OpEx cost of ownership perspective. That being said, I'll just open up for questions and any kind of questions that you may have and answer to those. Okay, I'll hand it to you.
Great. So the first question is for Richard. As you were discussing blockchain within your company, did you have to combat any perceptions around blockchain to be able to get the approval to proceed with this project?
I actually am laughing because when you hear blockchain, immediately people think of Bitcoin, the dark web, and it keeps going. But we had, it was quite interesting. We had to explain to everybody what blockchain is. It's a platform. It's agnostic. It can be used for anything. It just happens to make its name through Bitcoin, but we use that platform to be able to track, and the history cannot be changed, so it's auditable too. And at the same time, we looked at the securities too, and so the ability not to hack into the system for people in the public spheres not to be able to see what we're doing, and we wanted to ensure that that was all kept private. So once we put the security around and explained how blockchain works, I think it was quite easy. In addition, I like to highlight too. As I said before, Accelerate Energy is an innovator. It's a solutions company. We've done things never by conforming to what everyone else does. We do things different, and that's what sets us apart. Same thing goes for ERP systems or blockchain, for instance. Just because everybody else does a certain way, uses, for instance, SAP Transportation Management, does not necessarily mean that that is what we're going to do. Every salsa, when you go to a restaurant, has the same recipe. I don't think I would go to, it would make no difference to me to what restaurant I would go and eat Mexican food. I go to the one that has a little bit of a different recipe. And that's exactly what Capgemini provided me, is with a solution that is very different from everyone else. And that allows me to set myself apart from our competitors by bringing down OpEx, but also empowering the users. And once you empower the users, it makes things so much easier for the company to invest in other areas that we can make improvements in. So once we've told the entire story to our management team, it was very, very easy to actually get that approved.
Okay, great, thank you. I have another question here. Gautam, I think I'll pass this one your way. It says, what operational systems are you integrating the blockchain with to get real-time production volumes and tank storage volumes in different locations? It also asks, do you include pricing?
So as far as FSRUs are concerned, just in this particular instance, Elfije, we are integrating with the sensors on the systems and modules that Accelerate has on their vessels, and we're able to get that information on a real-time basis, Elfije, just in this context. But overall, yes, we could integrate most of these operation systems because they give out information on a real-time basis, and the blockchain can consume it.
Okay, great. So another one for you, Gautam, one of the questions is, how did this relate to SAP? And, I would add to that, what is the relationship with SAP as you've gone through and been building this blockchain program?
So the blockchain is built on the SAP Cloud Platform, right? So again, it's platform agnostic. However, in the instance of Accelerate, since they have SAP as their core ERP system, we've used the SAP Cloud Platform, right? So Cloud Platform and SAP kind of talk to each other natively, Elfije. And so we still are within the SAP realms, right? It's just that we've used the edge solution with the platform in play, basically.
Great. Another question, Richard, this one is going to be for you. What did your service providers think of the blockchain implementation? So your logistics providers, husbandry services, what was their reaction?
So it's quite interesting. When we talked to the major third-party logistics provider, we actually had quite positive feedback. They actually asked us, once you guys implement it, can we talk about if we can set this up for ourselves? So even the larger third-party logistics provider were interested in this blockchain, because that is something that they have looked into but haven't done yet. And in regards to the customs agent, the husbandry agents, which are smaller, more or less family-owned businesses in some of the countries, they actually quite liked it because it's a mobile app, and we will be able to. It's extremely user-friendly, and it's custom-made to ensure the user experience is kept at its best. And so far, we've done all the testing, and they absolutely love it. I mean, they said it's basically dummy-proof is the feedback that we've gotten from them.
Okay, great, thank you. And a last question here, so I would encourage anyone else who has any, please put them in so that we can get them answered before we close out in a few minutes. So Gautam, you mentioned, making it easy for, some of the less sophisticated users to use the system. Can you talk a little bit about, how did you evaluate the best way for the users to interact, and is it different by user?
So a great question, and thanks for asking, right? So Elfije, as part of this exercise, what we did was, step one is we put our user groups in 3 categories, right? The sophisticated players, as Richard said, to name a few, like the DHLs, FedEx, right? Then we ranked the second set of users in the second quadrant, right? Which is where we call as a medium sophisticated users, who can do a lot of APIs, but probably wouldn't be able to write onto a private blockchain, right? So that was the second set of users. And third, who are absolutely naive as far as the technology sophistication is concerned, right? And there's where we identified the customs and the husbandry guys. They're not IT shop. All they do is clear government documents, right? Comply with rules and help clear those products. So based on that, what we architected was we use the SAP Cloud Platform again, which has native UI, right, a user interface, where you enter 6 fields that updates the blockchain on a real-time basis, right? For the DHLs and the mid-tier, we expose our APIs, we set standards that, hey, 850, which is an industry term for purchase orders, we expect 6 fields back per event, right? So we define that protocol, which ensured data integrity as far as the medium and the high-end users. And because for the customs and husbandry, we made this app, we literally made it as simple as Richard said, dummied it to the basics, like there's 6 fields, and we enter that, update that on the blockchain.
Okay, great.
So hopefully that helped, just to give you a context on how we evaluated the groups and how we came up with this application, basically.
Okay, excellent. And we've had a couple more questions come in. So another question is there an additional software being used for invoice rate validation? And maybe the first question is, are you using this at this point for invoice rate validation? Might be the first question.
Right. So let me take that, Richard, and you can add in, right? So we are not using this for invoicing yet, right, Elfije? However, we are validating this for a preceding document, right? So typically in a classic procurement process, You have a purchase order, goods receipt, and invoice, right? What we are validating as part of the blockchain is a goods receipt, which triggers and enforces invoice and subsequent payment. So the control is little ahead as opposed to having that control on the invoice side.
Okay. And so if I interpret that, if you were to move in that direction, that would be likely an additional use case that would need to be built in. Is that correct?
Correct. And again, Elfije, the platform is scalable, right? So there are talks already with Accelerate for the next gen blockchain where we probably want to get invoicing through the blockchain. So those discussions have started, but as it stands, we believe the proactive control is on the goods receipt, which kind of drives the liability on the financials.
Okay, great. An additional question that we've had come in, how cost effective is it to implement blockchain, and is the solution demonstrated built on open source and on an open source platform?
So I can take the second question, right? The open source, the technology of blockchain, this solution works on different kind of blockchain technology, right? And just talking from an SAP perspective, SAP Cloud Platform offers two kind of technologies. One is called as a Hyperledger Fabric, and second is a multi-chain, which is an open source, right? The solution is compatible with both. So short answer, yes, it is compatible to an open source blockchain like a multi-chain.
Okay. And then, Richard, you spoke about at the beginning and a little bit at the end, this was chosen for, to help keep OpEx low, help with your competitive positioning. Have you found that to be the case as this has been implemented? Or I guess, are your expectations met? Might be the other way to ask.
So yes, so if you can go back, I don't know, Gautam, if you can go back all the way to where we did the software comparison. So that everybody sees the axis, we use blockchain as a benchmark here. And looked at different recurring OpEx implementation costs. And so you can see blockchain is the most economical solution. But at the same time, because of the real-time track and traceability of our parts that are moving, we know exactly where our spare parts are stuck. If there's any theft, we know that too, because at every point there's a check being made. What items have been received by the custom agent and what items have been received by the husbandry agent, all the way to delivery to the vessel. So if there's any delays or if something is lost, we have the ability to go back or also tell the vendor if they haven't provided the items ordered to ensure that we're only paying for the items that we actually received. So from an economics perspective, we're seeing the savings.
Excellent. And then a final question here. So Melanie, you've heard the blockchain example shared by Gautam and Richard. What's your perspective in terms of the market and what LNG companies need to do to be competitive?
I mean, certainly anything that brings down costs and allows you to offer differentiated products, allows you to be flexible in responding to market fluctuations and volatility. All of this sounds, like it's part of the solution for all of the LNG.
Okay, great, thank you. So I'd like to thank all of you that joined us today, and I'd particularly like to thank Melanie, Gautam, and Richard, who shared their perspectives this morning. I hope that this session was very helpful for all of you who attended. And again, you'll receive a copy of the recording most likely tomorrow by email. So thank you all, and I hope you have a great rest of your day.
Thank you.
Thank you.
Thank you.